This video will discuss the basic issues related to reporting intangible assets. Intangible assets are rights, privileges, and competitive advantages that result from ownership of long-lived assets that do not possess physical substance. Intangible assets are characterized as having either a limited or indefinite life. Some widely known intangible assets are Microsoft's patents, McDonald's franchises, the trade name iPad, and Nike's trademark swoosh. If an intangible asset has a limited life, the company allocates its cost over the asset's useful life using a process similar to straight-line depreciation. This process is referred to as amortization. To record amortization, a company increases or debits amortization expense and decreases or credits the specific intangible asset. Some companies choose to credit a contra account, such as accumulated amortization. For homework, you should directly credit the specific intangible asset. The cost of intangible assets with indefinite lives should not be amortized. A patent is an exclusive right issued by the U.S. Patent Office that enables the recipient to manufacture, sell, or otherwise control an invention for a period of 20 years from the date of the grant. The initial cost of the patent is the cash or cash equivalent price paid to acquire the patent. Research and development costs are expenditures that may lead to patents. There are uncertainties in identifying the extent and timing of these future benefits. As a result, companies record R&D cost as an expense when incurred. If the owner incurs legal cost in successfully defending the patent, these costs are added to the patent account and amortized over its remaining life. Companies amortize the cost of a patent over its 20-year legal life or its useful life, whichever is shorter. To illustrate, let's assume that National Labs purchases a patent at a cost of $60,000 on June 30th. If National estimates the useful life of the patent to be 8 years, the annual amortization expense is $7,500. Again, you simply take the $60,000 and divide by the useful life, which is 8 years. National will record $3,750, which is 50% of the annual amount for the 6-month period ended December 31st. The journal entry will be a debit to amortization expense and a credit to patents. The federal government grants copyrights, which give the owner the exclusive right to reproduce and sell an artistic or published work. Copyrights last for the life of the creator plus 70 years. The cost of the copyright consists of the cost of acquiring and defending it. The cost may be only the small fee that was paid to the U.S. Copyright Office, or it may amount to a great deal more if a copyright is acquired from another party. The useful life of a copyright is generally significantly shorter than its legal life. A trademark or trade name is a word, phrase, jingle, or symbol that distinguishes or identifies a particular enterprise or product. Trade names like Wheaties, Monopoly, Sunkist, Kleenex, Coca-Cola, Big Mac, and Jeep create immediate product recognition. The owner of the trademark or trade name register it with the U.S. Patent Office, which provide 20 years protection and may be renewed indefinitely. If a company purchases the trademark or trade name, the cost is the purchase price. If, however, the company develops the trademark or trade name itself, the cost includes attorney's fees, registration fees, design cost, successful legal defense cost, and any other expenditures directly related to securing it. Because trademarks and trade names have indefinite lives, they are not amortized. A franchise is a contractual agreement under which the franchisor grants the franchisee the right to sell certain products, to perform specific services, or to use certain trademarks or trade names. And usually this is within a geographic area. When you purchase a RAV4 from a Toyota dealer, fill up your tank at the corner Shell station, eat lunch at Subway, or make reservations at a Marriott hotel, or even if you want to think local, order a pizza from Lido's, you are dealing with franchises. Franchises may be granted for a definite period of time, or the time period may be indefinite or perpetual. In the case of a limited life, a company amortizes the cost of a franchise to an expense over the useful life. If the life is indefinite or perpetual, the cost is not amortized. Goodwill represents the value of all favorable attributes of a company that are not related to specific assets. These include exceptional management, desirable location, good customer relations, skilled employees, and high-quality products. Companies record goodwill only when an entire business is purchased. It is the excess of cost over the fair value of the net assets acquired. Goodwill is not amortized because it is considered to have an indefinite life. This slide does a great job of summarizing intangible assets. Research and development costs are expenditures that may lead to patents, copyrights, new processes, and new products. Many companies spend considerable sums of money on R&D in an effort to develop new products or processes. Companies record R&D cost as an expense when incurred. R&D costs are not intangible assets. But because these expenditures may lead to a patent or a copyright, we discuss them in this section. The solutions to this learning objective will be provided in another document.